Hello, and welcome. I have been working very hard to engineer 3 new tools for the NinjaTrader community. For anybody who's essentially trying to become a day trader or is a day trader, anybody who is a prop trader or is trying to become a prop trader and pass the evaluation and then become a funded trader, these 2 tools, in my honest opinion, are going to be a game changer. The first tool is what you see on your screen is a Python tool that I built that does essentially 2 things. First, it grabs data that you feed it, it trains the machine learning tool on that data, and then the machine learning tool will produce the next 24 hours of directional moves broken down by the hour. So essentially, it is going to predict what the next 24 hours are likely to do. Now, I didn't stop there. What I did, in addition to that machine learning tool and the prediction aspect of it, I built a separate analytics tool that is essentially taking samples from the predictions that the tool is making and testing it against actual occurrences, meaning it, let's say, predicted that the market's going to move up higher. How often was it right? And it gives you the actual percentage score of how accurate that prediction is. So it's got 2 separate elements to it, and I think it's a fantastic tool. The other elements that I built is what you see here on your screen is the AI TP. That's the Python tool that I built here, the AI Trend Predictor. So this is the AI TP prop trader. This I built particularly for those, as I mentioned, who are trying to become or are prop traders and day traders, scalpers, and essentially it's designed to manage the trades that the AI Trend Predictor makes. Okay, so it is a fantastic management tool. Just this aspect, for example, the trailing peak threshold. Majority of these prop trading firms, I'm sure you guys know if you've done the research on this, are essentially counting the threshold that they give you, the DD threshold, the drawdown threshold, from the high watermark of the peak price of your unrealized profits. So let's say it goes really high, but you didn't actually exit the trade. Well, when it comes back down again, they're counting that high, that peak, or what we call in the industry the high watermark, as your unrealized profit, the peak of your unrealized profit, and counting your threshold from there. Okay, so to many people that is counterintuitive, right? The way they're doing it, but it is their money that they're supposed to be funding you with. It's their money, their rules. Okay, so what we can do, however, is try to capitalize on that. So this is what the trailing peak threshold does. It is not your basic trailing stop. Okay, that in fact doesn't work for what the evaluation tests are looking for, because essentially a typical trailing stop will essentially just move up by the ticks and chase that current price wherever it is. That's not going to work. This is custom logic. What it's going to do is identify that peak and chase that peak, and only moves the stop as the peak changes. So if you're in a long position, it's the highest high, and if you're on a short trade, then it's the lowest low. And it's got minimum dollar amounts, it's got minimum percentages that it can essentially you can assign and do it like that. And then you have the your typical stuff as far as trade management, your price target, your risk, number of quantities that you want to trade. And then, of course, I've got money management. You can't have a trade management system without money management. So you can have your money management system where you have the net session profit limit, the net session loss limit, maximum number of trades. So, for example, this is a very, very aggressive management system. So let's say you had 10 trades in a row. You can essentially say, okay, after 10 trades and I'm risking, let's say $100 a trade, then that's $1,000. That's the maximum. So that's the worst case scenario. Okay, so if you took 10 trades, or if the system took 10 trades, and if you lost all of them, because that's what we have to assume in this business, right? You don't assume the best, you assume the worst and hope for the best, because if you assume for the worst, then you can be defensive and be careful with the money that you're trading. So essentially, it basically does that for you. And then if let's say you were to pick both sides, long and short, the consecutive loss switch will essentially, if you put that at 2, let's say it takes 2 short trades in a row, then it will automatically switch to the long side if it loses those two short trades. Okay, and same is true on the long side. Let's say it then switches to the long side and takes two more trades and loses those two, then it's going to switch back to the short side. Whatever number you put here is how it's going to act. Of course, we've got your typical break even with an adverse price check. If you wanted to essentially check that, it only moves the break even plus whatever X number that you put in there if price moves against you. And then, of course, you have the start and end times and the day that you want to trade. This is going to be important. Now, I'm calling this a trade management system and not particularly a strategy, because the strategy of for the entry conditions is very, very light. So essentially, I don't even want to call it a strategy. It's just designed to enter trades based on the predictions that the AI Trend Predictor makes. Now, I should say at this point, guys, that this is a very important video. If you're into this kind of stuff, if you want to use the latest possible tools and give yourself every possible edge that you can, watch the entirety of this video. It's going to be packed with information, and I'm hoping it's going to reduce the number of inquiries and not the inquiries, but the number of support or help type of emails that I receive. Because if I've already covered it in this video, I'm just going to shoot you back an email and say, please watch this video, okay? Because I put a lot of energy in making it so that I can make it as helpful as I can to everybody. And so this is essentially the other tool. This is the final tool, is the data grabber. So the data grabber essentially is going to grab the data from the charts. It's going to grab the data that I'm looking for to train my machine learning tool. The AI Trend Predictor is open, high, low, close, and volume. Those are the 5 pieces of data that the system needs. And I'm going to demonstrate everything for you here. So I'm going to start with the AI Trend Predictor. Okay, so this is an executable. Everything that you need is here. I know it's a terminal. I know a lot of people are not used to CMD, and they're like, what is this? It's very complicated. It is very, very easy to use, okay? Because this is something that is going to be very helpful to you. And even though it may seem daunting, like, am I going to be able to figure this out? Yes, you're going to be able to figure this out. This is very, very, very easy, okay? So let me explain what it is. Once you download it, essentially it's an executable file. So you would get the installer, you would come here, you would install it. It's going to say, do you accept? You're going to accept the terms. You're going to hit next, next. It's going to install it for you. This is the directory, in my case, that it's going to write it to. Or in fact, it's designed to write it to. You can change it if you want to. And then just follow the prompts. Let's not do that because I've already set that up. Yes, I do want to exit. And so I'm already here. And so once you actually expand the installation, you're going to get this. So you're going to have a message here, an email to contact me, rafi@pinnaclequant.com. You are required to have a license, and I will be emailing you that license key once you sign on. And I have mine already, so I'm going to go ahead and put that in. And it's going to say your license is active. Welcome. I hope my predictions bear fruit for you. No guarantees, but I'll do my best based on the data. I hope that's fair. And so essentially what it's asking for here is it's saying enter the name of the CSV. And I'm going to show you how easy this is, okay? We're going to use Data Grabber to do it. So let's go ahead and we're going to do a bunch of instruments. So I'm thinking CL, NQ, ES, RTY, and GC. And I think that should be about it. So let's go ahead and do that. Let's say we wanted to get data for Wednesday. That's smack dab in the middle of the week. It's not the extremes. It's right in the middle of hump day. All right, so what you want to do is, first of all, the value, if the default for you is 1, change it to 60 because we are trying to get the hourly data. Okay, we're trying to get the hourly data. Now, if you forget, don't worry about it. If you put 1, when you put the CSV file into the Python machine learning tool here, AI Trend Predictor, it is going to tell you that this is not 60-minute data, and so that's going to remind you to get the 60-minute data. Okay, it's really easy. So I'm going to change this to 60. I said we're going to do ES, then we'll do NQ. In fact, we'll throw a YM in there too. So those are the indexes and an RTY. So 4 indexes. We'll do ES, YM, NQ, RTY. We'll do energies. We'll do CL. Okay, that's crude oil. And then for the metals, we'll do gold. Okay, so we'll do 6 different instruments in this demonstration. So bear with me as I do it, but let me show you how easy this is. Okay, so As far as data, Data Grabber can grab any amount of data, okay? 15 years, 20 years, 30 years, it doesn't matter, okay? I remember speaking to a VP, a former VP from Goldman Sachs who had started his own little hedge fund, and I remember him saying, old guy, okay? I remember him saying, I like 30 years of data. He was a German guy. I'm trying to do my best German impression there, but basically he wanted 30 years of data. I always balk at that when somebody says 30 years of data because a lot has changed in 30 years, particularly when you're going to be training a machine learning tool to make a prediction based on what's been happening. Imagine giving it 30 years ago data, okay? You know, we didn't have algos 30 years ago, or we didn't have the amount of algos obviously that we do today. Okay, that's the first thing. Administrations have changed. Everything has changed. This, you know, the way the world is moving, every 6 to 8 months, every 6 to 9 months, something is changing. Okay, so you don't want to train any model on data that doesn't make sense. I don't care what happened 30 years ago. I want to know what happened the last 2 or 3 quarters. That's it. That's the only thing I'm interested about. Because remember how hedge funds bill, guys. That's the most important thing. The majority of this market is moved by 20% of this market, and that's the hedge funds. Okay, that's the ones who are shaking and baking. They've got the money. They are moving this market in all kinds of directions, up, down, sideways. It's essentially them. You have to think how they make money. Okay, they make money by essentially it's the old 2 and 20 model is gone. Most of these hedge funds are now doing like a quarter, even 1%, let's say, on the money management side, and then the majority of their money is coming from the performance. Okay, and so it used to be 2 and 22% for management, 20% for the performance. That is not the case for a majority of these hedge funds nowadays. There are, of course, exceptions. There are hedge funds that charge as much as 35, even 50% on the performance. Heck, if they're returning 100% return for you, 50% is pretty fair. But as far as the majority of them, the average amount that they bill, it's about, let's say, 1 in 10 right now. So that 10% performance fee that they're looking for happens at the end of the quarter. Okay, so they live and die by what's going on by that quarter. Okay, now to get even more into the logistics of how their operation works. Some of these hedge funds, okay, like for example Michael Platt's hedge fund, what he's doing is he's paying from the performance fee that he generates from his clients up to 30% to his traders. Sometimes it's 25, sometimes it's 20, but up to 30% to his traders. So you see how traders are incentivized within those firms to be very mindful of each quarter. Okay, so each quarter things can change. So 2 quarters is about the amount of data that you want. Okay, so what I'm going to do is I'm just going to go back to July 1st. I say all that to give you an idea of why I'm looking at to the last 2 quarters, because again, we don't want to look back 20 years ago when it's not an apple-to-apple comparison. They didn't have algos, okay, or it's the vast amount of algos that are running around. Even about probably half of retail right now is using algos of some kind, okay? Maybe it's not as sophisticated, maybe they're not using machine learning tools, and that's why I'm coming in here and I'm providing clients with a machine learning tool. Now, probably right now I should explain, as I'm reminded, why I'm using Python and why I didn't build something directly in NinjaTrader, okay? Number one, when it comes to any type of machine learning, data analysis, anything like that, the gold standard is Python, okay? And so there is a potential workaround to get it to work in the .NET environments. Like for example, there's Python.NET, and so I can go around the Python interpreter, use Python.NET, and then connect to the .NET runtime, and then feed the data into NinjaTrader. I can do all of that, okay? The only problem is the libraries that are, there's 2 problems. One of the problems is the libraries that are in Python are updated essentially all the time by the community. You've got the best of the best engineers, data scientists, statisticians that are working on those libraries. And that is not the case with Python.NET. It's a much, much smaller ecosystem when it comes to Python.NET, okay? And so that already puts us at a disadvantage. And so that is like a big reason as to why I don't want to use it. And then the other part of it is that if I were to use that, here's what's happening. When it finally comes back into NinjaTrader, the data is really, really slow. Okay, I can make the data fast by doing some acrobatics, but at some point I haven't tested it enough to know if it's NinjaTrader is going to be able to take that kind of data, or not, okay? And so even though NinjaTrader is like the coolest platform there is, I strongly recommend it to anybody who's trading, particularly who's trading futures. I think NinjaTrader is the gold standard when it comes to that, as far as platforms go. But when it comes to this, you have to use everything for what it's designed for. Okay, NinjaTrader was designed as a trading tool, like to be the premier trading tool, but a platform, I should say. But it's not designed to do machine learning stuff. That's really, advanced. Okay, maybe in the future and future upgrades, that is something that happens also in NinjaTrader easily, and we can have support from the NinjaTrader, engineers and support staff, and ensure that it's been QA'd on their end and it works. But as far as what I know works is what I've developed. Okay, so to use Python in a terminal like this is going to make life really simple, really easy, and we're going to marry it. Now, can I marry this and do it in such a way where NinjaTrader can call the Python script directly, the Python executable that I have, and do it immediately from the strategy that you load onto chart? Yes, I can. That would be a customized solution. That would not be a cheap solution. It would be a pretty expensive solution, to be quite honest, because it is a custom solution. So I can certainly do that for you as well. But for what I've got already, something that's already developed that the general public can use, that's going to be a lot cheaper. And so plus it gives you an opportunity to test it, to see how it works for yourself. Okay, so you're not just listening to me, but you're actually testing it yourself, and you see how it works. Okay, so we talked about the 4 indexes that I'm going to grab data from, and then we also talked about CL, we talked about GC. So I'm going to grab that. So let's go and start. Let's start with ES. Okay, so let's just grab ES really quickly. But here's what we want to do. So we have 60 minutes here. We're going to put 0701. All right, oops, 0701 2022, because we're going to go back 2 quarters until we don't want today's data, or Wednesday's data, excuse me. So let's go ahead and stop this at 27, let's say. Okay, so 327, that excludes Wednesday. And so we're going to grab all of the Wednesdays. Okay, remember, that's an important distinction also. I don't want to know what happened on Tuesday if I'm looking for Wednesday trades. Because Tuesday, Monday, Thursday, Friday don't trade like Wednesdays do. Every comparison that you make in data has to be apple to apple. Okay, a lot of people, unfortunately, jumble all of that together. Okay, so they'll say, give me all of the data, all. It's nice to theoretically say, give me all. Okay, just like the human side of us, just not us, the human in us wants to say, give me all, everything. Well, we have to be selective when it comes to data. Okay, so we have to compare, apple to apple, orange to orange, Monday to Monday, Tuesday to Tuesday, okay, Wednesday to Wednesday. So we don't just pick all of the data. We want particular days. Does Data Grabber grab all data if you wanted to? Absolutely. Just select this box. It will grab everything on that chart, okay? So we want to grab Wednesday, okay? So here's what we're going to do. We have 12 to 11:59 selected. Let's start with NQ, then we'll go to ES, we'll go to YM, and then we'll finish it off with the RTY on the indexes, but then we'll do CL and GC as well. So what you want to do for the file name is put something that you're going to remember. So just put NQ, okay? And that's all you need to do. So let's go and run it. Let's watch how fast this is going to happen. All right, this is NQ. Bam, we're done. Let's do ES. So we're going to switch that to ES, futures, ES, rename that with ES. Hit run. Done. Now we want YM. We're going to select that. We're going to change the name here so that the file name is memorable and easily identifiable. Done. RTY. We are collecting data. We are going to feed the Python this data, the AI Trend Predictor this data, and once we do that, it's going to help us because it is going to predict the next 24 hours, potentially. The next 24 hours of, as far as the directions, is it going to be higher or lower, broken down by each hour, and broken down statistically as to the level of accuracy. So this is CL. Finally, let's wrap it up with GC. That's 6 instruments for us to quickly analyze and come up with scenarios. And I'll show you what I mean as far as actual trading. scenarios. So let us now go here. So this is what we've got, right? So we've got enter the name of the CSV file. Watch. The CSV file, where's it written to? It is automatically written to, if you didn't change it during the installation process, this is the folder that it's going to write to. AI Trend Predictor by Pinnacle Quant, okay? And it is going to be found right there. Those are my files, okay? So let's say we want it to start, we'll keep that order. We want it to start with NQ. I'm going to right-click that, left-click Properties. That's the file name. Control-C. I'm going to come here, Control-V, write the letters, the extension, .csv. Hit enter. Got it. Utilizing your machine's cores concurrently to analyze the CSV. Results in output.txt. Best wishes and thanks. These are the results. Okay, so on the left side, you have hour 0 all the way till hour 23 predicted. Now I should note right off the bat that hour 0 is going to have either two sets of predictions. The math that I've done here is a little bit different for hour 0. It's either going to be 100% or 0%. And for the most part, you can ignore hour 0. It is probably the sort of, I compare it to the red and black on the roulette table in Vegas. Okay, so it's either, you know, red or black. It's a kind of trading that doesn't make a lot of sense to me. So I would ignore hour 0 and look for everything else, particularly from hours 1 through all the way down until 2 o'clock. Now these are Pacific Standard Time. Okay, so these are Pacific Standard Time. Please remember that. For those that are Central Standard Time, you're going to have to move the hours. Okay, so obviously that's how that's going to work. Eastern Time, just convert the hours. Okay, so this is Pacific Standard Time, and here's how I'm going to run this. And what I'm looking for in these results is not just a direction. That's part of it. I'm looking for at least 60% accuracy on the score. Now, the software, very complex code, okay? What it's doing is two separate things. It makes it look so simple and easy, okay? It isn't. It's a lot of work. And so this side of it, the left side of it, is the machine learning tool that just got trained on the data that we fed it, and it gave us the results for the NQ file that we gave it, okay? But on the right side, here's what it did. It said this is what it is for hour 1 down 50%, okay? Hour 2 down 50%. It gets interesting for this set of data in 3 different spots here, okay? 1 for hour 5, and then hour 11 and hour 12, okay? Because it's at least 60% on. That's the rule that I follow. It's got to be at least 60%, okay? Accuracy. So what it does is it basically takes all of the predictions it is making in the background, and it will grab a sample of it for all the predictions that it made for the past since July of 2022. For every prediction that it made, it essentially grabbed a sample, a relevant sample of it, and it tested it to see how often it was right. Okay, so if it's right 50% of the time, or 47% or 44%, we're not interested. Okay, don't worry about those. Now it might be correct. All right, the machine learning tool might be correct. That direction might be right, but I'm trying to give myself an edge. You want to give yourself an edge. And the edge is statistical accuracy there, statistical edge, and it is 60%, 60%, 60%. Sometimes I've seen 70%, 71%, but 60% is where the minimum threshold is, okay? So there are 3 there that we can act on. So what we want to do right now is load all of the data, okay? Get all of the machine learning results and the accuracy scores loaded, and then we'll actually do tests on this, okay? So we'll actually see in real life on Wednesday. Today is Thursday, but I'm gonna run this for Wednesday. We're gonna see in real life how well this thing predicted, okay? So we'll show you the entire gamut there. So let's continue with the rest of it. So we just did NQ. Let's just go ahead and do ES next, because that was, I believe, the order we used. So let's go ahead and grab ES, again, .csv. Boom. All right, those are the results. We'll analyze the results in a minute here. Let me load all of the data really quickly. Okay, so we did YM next. Again, the order here does not make a difference. I'm just going by the order that we did, that I essentially loaded this. Doesn't matter which order, okay? So YM, RTY, But you see how easy this is, guys? This is very simple. Again, that I know the terminal to some people is a little daunting, okay? Oh my gosh, what is that? Don't be scared of it. It's very simple, okay? I've made it very easy to use, okay? And then in the future, again, as I was mentioning, if you guys like it, let's say you get this, you like it, and you want to combine these tools into one tool on NinjaTrader so that it's literally calling the Python immediately without this Python AI Trend Predictor script running, it will actually do that for you. We can do that. It is a custom solution. It is not going to be an easy or cheap solution, but it is for those that are serious. If you're moving size in this market, talk to me about that. Okay, I can certainly help you. So let's do finally GC. Guys, that's it. We just loaded all of the data. Okay, all of the data. And so these are the results. Now we're going to test. Okay, how accurate are these things? All right, let's see. One way to find out. All right, let's go. And so this is AI Prop Trader, AITP, excuse me, Prop Trader, Wednesday. And what else? Let's go and set it up for the money management side. Right off the bat, I'm going to say 1,000. I mean, you could put a smaller number, a bigger number. I don't know what size you're trading. I don't know what you're moving. But as far as this goes, all right, this is, as I mentioned, a very, very aggressive system. So it's designed to be a trade management system, and I've made it so that anybody who wants an actual strategy, let's say you have a particular indicator that you use, and you want to combine what the machine learning AI Trend Predictor is doing and combine that and marry that into your indicator. I can certainly do that for you. And again, it would be a custom solution that I would provide, and you would be able to have your own essentially trade management system, which is what that is, plus your own strategy in there. So again, talk to me if you're interested in something like that. You can get an idea for us. I always get these emails about price, and you can get an idea of my prices by going to my website at pinnaclequant.com. Click on the consulting tab. You'll see what my typical hourly rate is. It is on the high end, okay, but you get what you pay for. I am a licensed professional. I'm an actual engineer. I'm an architect. I can do development in anything you can imagine. If you want a cloud solution, I can do that for you. Whatever you need, okay, I can take care of it for you. As far as engineering goes, the sky's the limit, okay. But you're also getting someone who's been doing this for over 2 decades. All right, so I do also offer bulk discounts for those. I work in the same way as sort of lawyers do. You put them on retainer. Okay, so you can essentially set me up on a retainer account, and I would bill against that retainer account. And I do offer significant bulk discounts for people who do 30 hours or more, as far as development time goes. And I can provide very custom solutions that can essentially meet all of your needs. Okay. So let's set it up a little bit. Again, why do I say all of that? Because the maximum number of trades, again, that's what you want to think of first. I said this earlier. When it comes to trading, I want to say something else too. Just when it comes to prop traders or those who are trading other people's money, okay, if you're a trader working in a hedge fund, okay, if you want to be the most successful trader that you can be, don't think about your profits. Don't think about your losses. Don't think about anything other than this. Pretend the money that you're trading belongs to your children, that it's their money, okay? You will become a much, much better trader. Just have that mindset. Put their picture on your monitor, whatever you need to do to be reminded of that, okay? That it's not your money, it's not the client's money, it's not the fund's money, it's your kid's money, okay? You'll become automatically a better trader, in my opinion, okay? You'll see. So I'm going to say this, okay, let's say 7 here, okay? That means, worst case scenario, if let's say my stop was, I don't know, 20 ticks, okay? And each tick was, let's say we're trading NQ, it's $5. Actually, that would be very little for NQ. For NQ, you're closer to $2.50 on the admission price, which is your risk, your stop. But let's say you were trading NQ and you wanted to put 20, that's $100. Okay, so you're going to say, by that math, if I lose all 7 trades, the most I can lose today is $700 plus slippage. Okay, that's about it. That's the most that I can lose today. Don't think about how much you're going to win. Okay, don't think about that. I know that's counterintuitive. People think you have to think positive, Rob. You have to think positive. You have to think positive things, and positive things happen. Not in trading. Okay, in trading, it's about data and math, and in between there's some luck. But data and math is what it's about. Okay, so it's not about hopeful thinking. It's not about wishful thinking. It is about doing the worst case scenario math, and once you do that, you'll feel a lot better knowing that is the worst case scenario. Now, are you going to lose all 7 trades? Odds are no. Okay, but just assume that that's what's going to happen. It's not hopefully. The hope is you actually make money. But if you think this way, then you're going to take the worst case scenario and you're not going to blow up your account. Okay, you're going to say, okay, I can afford that much. All right, if I lose all of it today, I can afford that. If you can't afford it, then you have to search something else, trade something else. Okay. When it comes to the prop trading firms, it's their money that they're evaluating on. It's fake money in the beginning, right? And then so most people are trading, actually most people are trying to get that past that threshold, okay? And so they'll trade whatever it takes. Sometimes they get like a big win, and I've seen people take this big win, like they'll have like an awesome day. It's like a $2,500 home run day, which doesn't happen often, but let's say it happened. And now they just want that additional $500. So now they start playing it easy, okay? Now they're like, I just want that additional $500 to get past that hump, and I'm going to be funded. But guess what, guys? You have to show consistency. Getting past that evaluation is step 1. You have to have a process, and that process has to be consistent. Okay? Without a process, nothing works. This is not a business of home runs. This is you got to grind out this business. Okay? It's an everyday thing. And I know in our society, the more time has progressed, the more this whole idea of work as little as possible and make as much money as possible. Now you see commercials on YouTube and various places where people are like, I work 18 minutes a day, 18 minutes, and bam, boom, $1.2 million a year. This is nice. It's nice fantasy, but unfortunately, it's very far away from reality. Because in reality, here's what I say. If you want to be successful in this business, in my humble opinion, work 6 days a week and never let anyone outwork you. Okay? That's how you become successful. Have a very set process that you do every single time you're sitting at your desk. And I know you're trading Monday through Friday. I said 6 days. The 6 days research is analysis, is self-reflection, is note-taking, is understanding what went wrong and what you can improve on. These are things that you have to do as a trader if you're serious about this. It takes time. With all these tools, all this automation that we can provide clients, I still say, ask yourself this. Do you think guys who are working as traders in hedge funds, do you think they don't have automated tools? You think they don't have machine learning? You don't think they're not using AI? Of course they are. But the trader is still sitting at their desk. They still have a bunch of monitors. They're still taking notes. They're still students of the market. Okay? There is no escaping that. If you're a serious trader, there is no, I just sit there, I sip Mai Tais in the back of a yacht, boom, bam, $20 million a year. It doesn't work like this, okay? Not in this world. So that's only on YouTube. It doesn't work anywhere else, okay? So I think you get what I'm trying to say. And so what we want to do is set this up really quickly. Oh, what is consecutive loss switch? I think I explained this earlier. So if let's say you had selected both directions, okay? And it takes, let's say, 2 losses in a row on a short side, then the next setup that's looking for is only going to be on the long side until it takes 2 losses on that side, then it switches back to short. That's why this is. So this is for those, again, it's a management system. If you had your own specific strategy in addition to what I'm going to do here, then I can certainly do that for you. But here's this strategy, if you want to call it that, as far as the entry strategies. So the exits, you can see everything from money management and various customized stops, the most interesting of which is, of course, the trailing peak threshold, which is you trying to capitalize on your unrealized gains as much as possible, because particularly for prop trading firms, they are counting the unrealized high as your drawdown, which is, that's what is really the problem. That's why a lot of people have to pay those reset fees, okay? And it's very difficult to pass. And even if you do pass, if you don't have a process, you'll ultimately fail again in your funded account, okay? Because you don't have a process. You need to have a process. And I'm going to show you that process here and how simple it is. Yes, this is going to be a long video feel free to stop it, take a break, drink some coffee, come back and watch it. But I want you to watch this video in full if you're serious about this. If you're serious about becoming hopefully successful as a prop trader, as a day trader, as a scalper of the market, a true student of the market, then please watch this video, save this video. Let me know what you think about this video in the comments. Certainly share this video if you think if it helped you, share it with someone else too so that it helps them as well, and so on. So let's go ahead and just leave this at 4 for now. A majority of the stuff that I'm going to demonstrate is going to be single direction for each block of time. There are 3 blocks of time. Okay, so it's going to be single direction, so I'm not too concerned about that. But if you did have both directions, the system looking for both directions, then it would be a good idea to be mindful of the consecutive loss rate. So the strategy is, if I want to call it that, here's what I'm doing for each entry. If it's going to enter a long trade, it is looking for, it's a little bit counterintuitive, for a long trade, it's looking for a green bar followed by a red bar. Okay? For a short trade, it is looking for a red bar followed by a green bar. Okay? That's it. There is one other rule in there. It's basically looking out for extremes on the RSI side. So if it's over 80 on the 1 minute chart, because that's what you're supposed to trade on the 1 minute chart. So you get the hourly data, but you trade it on the 1 minute chart. I'll explain why. You essentially are going to be on the RSI side 80. If it's higher than 80, then it's going to ignore the long trades. If it's below 20, it's going to ignore the short trades. So it's looking for the extremes. That's it. There's nothing else. I don't even want to call that a strategy. Other than the strategy, the key strategy is to go off of the AI Trend Predictor's prediction. That's the strategy. We're going to use those instruments, those particular hours to trade or minutes to trade, and that is the strategy. Okay, so I'm going to go and demonstrate that. All right, so let's go back to the tool. Now, as I mentioned here, the results are in the output.txt file. There is an output.txt file, and you can essentially see it. It looks like this. Okay, so it's got a printout of the hours, and then you can essentially right-click this or right-click the actual file itself and send it to whichever folder you want to send it to. And so when you generate it, if you wanted to actually use the output file, let's say you're a developer, okay, and you want to develop your own strategy, then you can use off of that output file. You understand where I'm going with this. You can use StreamWriter to be able to grab that data and look for that data, look for a percentage of that data, and then have an entry condition. Okay, so you could do that. If you're not a developer, guess what? I am, and I can certainly help you come up with other things outside of just the data prediction itself, if you have your own set of rules. Or more importantly, even if you don't have your own set of rules, you just want to use it as is, you're happy, you're impressed with what this is doing. I'm certainly impressed by it. But as far as this is all you want to do, again, you want to combine these three tools into one tool on NinjaTrader. I can do that, but it is a very customized solution. It will take some time, and it will not be cheap. Okay, so if you don't want to, if you don't have the kind of funds that is going to be able to afford that, that's okay. I've made this very affordable. These 3 tools are going to be affordable for anybody to use. Okay, it's going to be priced at the retail level. All right. So this is where we're at. Let's go and see what we've got on the terminal. So let's begin. Take it from the top. Okay. So from the top we had NQ, and I'm just going to scroll all the way there. Okay. So we have NQ right here. What are we looking for? Again, we found 3 potential entry points for NQ. One is at 5 o'clock, 60% here. The other one is at 11 and followed up by 12. Now, if you've been trading, you already know that the 5 o'clock time, 6 o'clock, 7 o'clock for Pacific Standard Time, that is a pretty volatile time, but that's okay. That's one thing. And then remember on the other side, as we get close to the close, that's also something you want to consider too. So here's how I'm going to set this up. What you want to do is you don't want to take the full hour. You want to cut it in half. So you start from the 5 o'clock time, you cut it in half. So it's going to be from 5 until 5:30. Okay. We're going to be looking for down trades. All right. And then we have 2 in a row, which is what I like to see, up and up. Okay, at 60%, 60%. And so we don't want to go the entire, if you leave this on from 11 until let's say 12:30, I mean, it could potentially take like, if you put, on the max number of trades, if you put like 15, it could potentially take 15 trades. Because think about what I just said as far as the entry conditions. Okay, so it can take a lot of trades, but we're going to do that anyway just for this demonstration. We're going to do that. Let's see how many trades it takes. So 5, we're down, 11 until 12:30 up. So 5 to 5:30 down, 11 to 12:30 up. Here's what we're going to do. We're going to come back here. And so we said from 5 to 5:30, we're looking for short trades. And then we said 11 till 12:30. Okay, usually you want to break this up into 11, 11:30, 12, 12:30. Okay, but just for demonstration, so basically, let me take a step back here. What you want to do ideally is this. Okay, that's what you want to do. This is the ideal situation. I'm not going to do that, okay? Because I want to see how let's be aggressive, okay? Let's be really aggressive and see what it's going to do. All right? Now remember, we're saying be aggressive. This is NQ. You have to know in every trade that you make, you have to know where you're at. Okay? That means if let's say you have to know if this is the UFC, or if this is a boxing ring, or if this is the wrestling mat. You have to know which sport it is, okay? Then you can play that sport, okay? You have to know that NQ is the beast of indexes, okay? That's number one, all right? So NQ is like, the most volatile of them. That is the beast of the indexes. So for slippage for NQ, for example, I use 2 ticks. For ES, for R2I, I use 1 tick, okay? So we're going to go and remember to do that. Let's go 2 ticks for NQ. And next what we're going to do is the most important factor is we have to figure out what the stop is going to be. The stop is your price of admission. How much you're willing to pay for each trade. That's your price of admission. You may lose, okay? You may lose all of it, okay? So you may lose 7 trades in a row if we put 7 here, right? Maximum number of trades, 7. I might lose all 7. If I'm going to risk $250, that's a $15 hit today. Okay, actually, no, excuse me. That is a $1,750 hit today, not $1,500. $1,750 hit today. Okay? I think I initially wanted to put 6 in there, so I put $1,500. But that's a big loss, right? You would have in a single day. So let's go ahead and do that. But if we're gonna take the risk, we're gonna see what it is. If you're trading NQ, that means you're a risk taker. All right? And so let's go and see what we've got here. So we're taking $250 worth of risk. What we have to do is we have to come down to risk per trade. Okay, we have to put 50 here because it's $5 a tick. You have to know your ticks. Okay, it's $5 a tick. So same thing on the profit side. We're gonna say 250, 250. That means if we hit at least $250, this custom logic for this stop is going to be chasing the peak, starting from when you have an unrealized profit counted from the close of the bar at $250. I hope that makes sense. 25% means it's trailing away from 25% from that peak. So if you hit, just to make the math easy, right, $100 in profit on that peak, 25% away, your stop is at that $75 mark. I hope that makes sense. Okay. Same thing is true on the short side. All right. This is flatten everything. It's going to essentially, if you're not out of the trade, it's going to flatten you out. Essentially, this is RTH 1259. I'm being mindful of the RTH 1 o'clock. So if you're using a brokerage that has margin requirements that change, let's say 15 minutes before RTH, then you would put something like 1244 if you're in Pacific Standard Time and adjust that time if you're in Central or Eastern Time, okay? Because the times I'm discussing obviously are in Pacific Standard Time. I am in Los Angeles. So let's pick the instrument. It's NQ. Okay, and let's make sure that we are only going to grab the information that we ran this AI Trend Predictor machine learning tool on, which is just Wednesday. You have to be specific, okay? Just Wednesday. This is not all Wednesdays, all right? It went through all of the previous Wednesdays, starting from last week, all the way to July 1st Wednesday. All of those Wednesdays, we grabbed the data, and now it's predicting the next Wednesday, okay? The next 24 hours. And so let's go ahead and run it and see what happens. Very aggressive to do it this way. Can take a lot of trades, but that's okay. Let's see what's going on. All right. These are the results. So it took maxed it out at the 7 trades. Let's see what happened. Okay. So on the first trade, it entered right there. Remember, it said between 5 and 6 o'clock it's going to be down. So you always want to take, so it looks like it went down to about 5:45, somewhere around there. And that's where it is. It grabbed it. So it essentially moved the stop to 25% away from the peak in this case, because it's a short trade. The peak is right there. Okay. And then that was it for that time, because remember, it's between 5 and 5:30, and that's already 5:40, what is that, 4? Okay, 3. And next we have the trades between 11 and 12:30. Again, I wouldn't have done it this way, but that's okay. All right, here we go. So we have 11, booked it. That's the peak, booked it, entered again. That's the peak, booked it. And again, it booked it. All of this is because of this logic, the trailing peak threshold. Okay. Here's the third one. This one lost. It grabbed, oh, look how close that was. We missed it. All right, that's okay. So let's go back down. So then that's the next one. That's the peak there. It peaked right there. It grabbed it, kept going. Because remember, we said, look, that's 25% away from the peak. That's where it is. All right. And that's the final one. Okay. So it would have closed at 12:59 if it didn't, which is right there. You might have had, if it didn't exit here, it would have had a pretty much tiny bit of a win at 12:59 right there. Okay, or right there. And so those are the results. Please, Rafi, did you use slippage? I did use slippage 2 ticks. Okay. So that's what it is for NQ. All right, let's keep going. So we did ES next. It's an order, but again, it doesn't have to be. You just look at the file name right here, guys. Okay, just look at it right there. You left yourself a nice little note when you produced it in Data Grabber, and it was right there. The file name is right there. Okay, so what do we have for ES? Again, ignore the hour 0. Okay, so the only thing I've got for ES, remember, adjust your time. Just be mindful that this is running off of Pacific Standard Time. Okay, so 2 o'clock for me is when the session ends. Okay, so the ES session has ended. So basically it's saying between 1 o'clock and 2 o'clock, it moved up 63.16% of the time. That's the only 60% or more that I have here, ignoring hour 0. So that's not a trade I'm willing to take. Okay, if you've been trading ES, you know that there's going to be very little movement between 1 and 2. So that's, Pacific Standard Time. All right, adjusted to Central, adjusted to Eastern. So Pacific Standard Time between 1 and 2, that's when the market is pretty much flattened out. Okay, it's going to be barely any movement. There's no reason for me to risk any money there. So for ES, I've got nothing. So it is not mandatory that we trade every single instrument. You're analyzing the data. There might be a day where you analyze 6, 7, 8 instruments and you can't find anything. Okay, there is no 60%. That's okay. That is how it is. It's not probable for that to happen. There's high probability that that doesn't happen. There's high probability that you will find at least 2 or 3 instruments from, let's say, 6 or 7 instruments that you check where this criteria is being met. Okay, but if it's not, well, guess what? That day, you don't trade. There's no rule that says you absolutely must trade every single day. Some days, on the days where you're not going to be trading, you could be studying. You could be doing research. You could be thinking about other plans. You could be thinking about, how I can automate things further, and so on and so forth. So let's go to the next one. Yes, we got nothing. YM. Let's see what we got for YM. 2 o'clock, 60%. 4 o'clock, 63%. And it looks like, unless I missed it, that's it. Sometimes I have to look at it twice because, all right, no, that's it. So I've got 60% at 2 a.m., and I have, furthermore, at 4, I have 62%. Now, here's the situation with this one. 2 a.m., it's predicting up. In fact, it predicted up for hour 3 too, but I'm ignoring it because it didn't give me the minimum threshold that I'm looking for of 60%. So again, remember guys, just to recap, this side, totally different logic. From that little dash, look how simple this is. From that little dash, I've made it look simple. It's nothing but. It's everything but simple. Totally different library in Python. From the right side, from this side on, accuracy, totally different library. These two are very different, these two libraries, okay? This side, the statistical library, is essentially checking to see how accurate the machine learning library is, okay? And so we've got 2 o'clock, 3 o'clock up. At 2 o'clock is the only time we're considering. So between 2 and 2:30, we're looking for an up trade. And furthermore, we are now also looking for 4 to 4:30 for a down trade, okay? Now, YM is not as volatile, nowhere near as volatile as NQ is, okay? So we're not going to risk $250 for YM. We're going to risk $150, but on the reward side, it's the same. Another golden rule of trading is the higher the risk, the higher the reward. The lower the risk, the lower the reward, okay? So that's just another rule of trading. So now we've got YM, and again, just to recap the times, 2 a.m. up, 4 a.m. down. All right, so what we're going to do is come back here, and we're going to say 2 a.m. up, excuse me, 2 a.m. yeah, up, and 4 o'clock down. So 2:30 up, that threw me off, and 4 to 4:30 down. All right, now I'm not going to risk $250 like I did for NQ on YM. It's still $5 a tick, but I'm not going to risk $250. That's too much for YM. These are, when you trade these various instruments, you'll see what the volatility is, and you'll see what I'm saying if you haven't already. So let's go ahead, and we're not going to risk 50. We are going to risk 150 bucks. Okay, so I'll leave the profit target the same because it's already over a 3x multiple, 3R there. So same thing, 150. Okay, 25% still. This, I'm going to go with 1 tick of slippage. It's got less volatility. So let's see what YM does. Oh, we have to change it to YM. Important. All right, let's see if everything else is good. Yep, let's go and run it. YM, 2 trades. Both are winners. Okay, that caught it off perfectly, almost here. And then that's the next one. Okay, that's the peak threshold, and that was it. So that's YM. This is off the data, guys. So let's go ahead and, in fact, let me show you really quickly what the data itself looks like so you guys get an idea. So this is, excuse me, yeah, I want to close it. All right, so this is what the data is going to look like, and this is what we're feeding into the machine learning tool, okay? You don't need to look at this, but in case you wanted to, here's what it looks like, all right? It's got 874 rows. The machine learning tool, AI Trend Predictor, is using all cores on your computer. My machine has 8 cores. It's running it concurrently. So it's multi-processing it, and it can give you results like this. I've tested this thing where I've put in 15 years of data. Actually, it was more than 15 years, of 16 years of data, and it took about a minute and a half, I would say, for it to grab all of that data and print out the results. So it is very impressive as far as the speed and the efficiency of it. So again, you don't need 15, 16 years of data. We're trying to see what is happening now. Okay, what's been happening these last 2 quarters, 3 quarters tops. That's it. We don't want to do anything more. Okay, so we don't need this at all. All right, let's go back to the continuation of, we are now on RTY. All right, let's see what we got with RTY. Ignoring 0. We have a couple of, right off the bat, 5 a.m. is down. 7 a.m. is down. 9 a.m. is down. 10 is down. All right, in a situation like this, I'm not going to pick every single one. You want to pick the cream of the crop. Okay, so the number one, 71.05% is the one I'm going to bet on. One bet as far as that direction goes. Because if you keep seeing this, I mean, you keep going for it, it makes no sense. You're not going to pick, if there is nothing else, you pick the 60th percentile. You want the best. I hope that makes sense. So even after that, there is 60%. So we're going to pick just 9 a.m., which is the best one. So 9 to 9:30, this is RTY. I'm going to RTY-YM move about the same. So I'm not going to do anything different as far as that goes. As far as the risk goes, price of admission is still going to be 150. Excuse me, not TRY, RTY. All right. So what do we got here? As far as the time, let's double check. You always want to double check, even in real life. So 9 down. Okay, 9 to 9:30. Remember, it says the hour, the 9 o'clock hour is down. You go from 9 to 9:30, 30 minutes of that. Okay. And we are not doing anything with the other one. You can leave us like this because it's not checked, but sometimes people get confused. So let's just put 0, 0 there. That means it's not looking for anything, primarily because it's not checked. But let's go ahead and leave everything else the same. Still $150. If we hit $150 of unrealized profit, it's going to start tracking that peak as the peak moves. And it's always going to be, the stop is always going to be 25% away because that's what you put here. You could have put 10% away if you want it to be 10% away. It's up to you, okay? I think 25% is a good number. In fact, for those who are not trading with prop trading firms, if you run some tests, you'll see if you put it on 50, sometimes the actual hypothetical results are even significantly, not just sometimes, significantly better as far as 50% because you gave more room for the trade to breathe, okay? But in the prop trading world, when you're trying to maximize that the unrealized profits, okay, where they are doing the DD, the drawdown from the high watermark of the peak price, which is, again, is counterintuitive. It's sort of strange to do it that way, but their money, their rules, okay? And I also get why they've done what they've done. If you really think about it, you're trading somebody else's money. How do they know you're trading their money, that you're not just going to take a bunch of wild risks, okay, and not even think about it? You're like, hey, it's not my money, and just start taking wild risks, okay? And so they want to know that you have you're careful with the money. When there's unrealized profit, you grab it, okay? That's pretty important. A lot of people don't do that. A lot of people, ask yourself if when I say a lot of people, me included, when you're up. For example, I've made long-term investments where I'm up significantly and I don't do anything about it. I just go, it's going to go even higher, even higher. It's already up like 30x, 40x, even higher, okay? Human nature, okay? We're flawed. What can I say? But it's, you have to try to fight against that nature when it comes to if you're going to be a serious prop trader, okay? That's just how that is. So we have 30 ticks. Let's make sure we did select RTY. All right, 9 a.m. till 9:30 down. That's it, nothing more. We have a tick of slippage. Good. Let's see what happened. All right, there it is. So we put 150. It had plenty of room to go further. We did put 150 because we matched it up with the risk. Okay, 1-to-1. It doesn't mean at 150 it's going to necessarily book it, right? That's when it's going to start moving the stop. The custom logic for the stop is going to be executed when and if you hit a minimum of $150 in profit, of unrealized profit, unrealized profit. So it had significant room still, but this is all it is, one trade. And small win, but it is what it is. So let's go ahead and move on. Remember, if you are doing prop trading of any kind, if you think you're going to do it all in one day, that's not a process. That's luck. Okay? You don't get home run hits. Guys, I've talked to so many traders, so many in the various different types of traders. Some that are just starting out, some that have been around for 20, 30 years, some that used to be on the actual trading floor and now they're looking for solutions. They know that life is completely different from what it was when it was on the floor versus now. I've talked to all kinds, funds, hedge funds, all kinds. The strangest conversations I have are when people start talking about their wins. Like they'll say, for example, a lot of options traders graduate into futures trading. Okay, same on the equity side, they graduate into futures trading. They'll say something like, oh, when I was trading options, had a $40,000 win one day, had a $62,500 win another day. And I always wonder, like, you know, that's what sticks with us. Again, human nature, we're flawed. It sticks with us. The wins stick with us, especially if they're a big size win, they stick with us. And we sort of hide the pain, okay? I almost want to ask, but I never do, is do you remember the times where you lost the money? Because I do. Though they haunt me, okay? But as far as the, you know, they never talk about that. I can tell when somebody only talks about their wins, that, and they're talking to me to try to move from options trading to futures trading. I know the pain that they're going through, the silent pain that they're not telling me about, okay? Because they only talked about their wins. Very, very unlikely, okay, for someone to have $40,000, $50,000 win and then say, I want to trade something else now. The reason he's saying that, I believe the 40, 50, 62,500, I 100% believe it. What he's not telling me is he's also lost well over $100,000 net when it comes to trading, and now he's like trying to do something else. Okay. Anyway, so what are we at next? So we have now CL. Let's see what crude oil is doing. This is also not as volatile as NQ, obviously, but it is pretty volatile. When you're dealing with CL, when you're dealing with indexes, who's your enemy when you're trading? Who's your enemy? Unexpected news or economic news that is unexpected. Okay, so they have the forecast is this, but it killed that forecast. It's much better than we anticipated, or it's much worse than we thought it was going to be. That's going to impact the market. Okay, so data is fantastic in every other situation, but unexpected news supersedes data. Okay, CL is one of those. CL is where it has a lot of unexpected news. Anything that goes on with Iran and Saudi Arabia and, you know, ships and containers and so on and so forth. It's like anything that happens in that world could impact us. Now, of course, we have Russia, another OPEC member, and so we have you know, volatility. But anyway, we're still going to stick with the numbers. The test is going to move on as is. All right. So what do we have? 65% at 4 a.m. down. Okay. Anything else that's at least 60%? No, that's it. Okay. So CL. We are looking for a single between 4 and 430 down on CL. 4 and 430 down on CL. So let's change that. 4 to 430 down on CL. Now, if you were trading this in an actual environment, right, you're essentially going to load the strategy, and on that strategy, these are the times that you're going to pick. The strategy, of course, is a technical term strategy in NinjaTrader. This is a trade management system, the AITP prop trader. It's a trade management system. I don't want to call it a strategy, though technically, NinjaTrader parlance, it is a strategy. Okay, it is a trade management system. So let's go ahead and change that. We are now doing. Excuse me. Let's see what we've got. Yeah, CL. So CL is 443. Correct. Why did I think that I was still in RTY? I don't know. But it looks like I've changed CL already. Talking and typing at the same time. Look at that. If I chew gum, it's over. It's over. So basically, let's see. Let's see what we've got here. All right, CL, I'm going to take a little bit more. I'm going to pay a little bit higher for the price of admission. Not 150. I'll pay 200. I won't pay as much as NQ. I will pay 200 though. I'll give them $200. I'm not hoping not to give it to them, but that's the max I'm willing to give. And so let's see, risk per trade, CL, $10 a tick, guys, not $5. Okay, so for this guy, we're gonna put 20. That's $200 of risk. So if I were to lose all, let's say it entered 7 trades. Very unlikely for in 30 minutes for it to enter 7 trades, but let's say it did. You would be down $1,400. Worst case scenario. Very unlikely for that to happen in 30 minutes because we're only looking for trades between 4 and 430. Could happen. Nothing is impossible. Okay, but because I changed this to 200, I'm going to change this to 200. Okay, well, doesn't matter on that side because we're looking for short, but just so that appearance sake, 200, 200. Okay. 430, and we have slippage. Let's make sure. Yes. All right. Wednesday 430 CL. We take a loss. We have a loss, ladies and gentlemen. And it looks like that one won. There it is. That one won. Okay, the next one lost. Okay, with slippage and the stop being 25% away, you are down a little bit. Okay, you are down $50. That's what happened there. So one win, one loss. That's what it was. Had we put, a bigger amount instead of 200, if we put, let's say, 250, again, we're not going to do that. But if we had done that, then this trade may have never materialized. Okay, the second trade, because it would be come down here, okay, somewhere, and so the stop would have been here somewhere. Okay, but we didn't do that, and we took a small loss. All right, that's okay. So we move on from CL. We have finally GC, I believe. But you see how, guys, I didn't change anything in my rules. Okay, that's how you have to think about trading. That was the process. I'm looking at that time, and so I'm going to put a risk, and I'm going to basically coincide that risk with the reward side. Hopefully that's the minimum reward side. Hopefully it becomes a much bigger number than that. But if it's not, I don't want to give back my unrealized gains. And so that's how I would do that. So we're going to stick to the rules, whatever they are. We stick to your process. And so this is GC. I believe that's the final one. And so let's do, GC has up at 6 o'clock. Risky time, 6 o'clock. Why? Because it's 6:30, all sorts of volatility, Pacific Standard Time. That's the market open, right? And so let's see if we've got anything else. Nope, that is the highest. Again, in case you're wondering why I haven't looked at anything here, for the purposes of this demonstration, I wanted to do where there's the most volatility. So let's go ahead and see 6 o'clock. Let's see if I've got anything else. That's it. So 6 o'clock is the best option I've got. 63.16% of its predictions are correct. Okay, could be wrong, but this is what it's predicted. So 6 to 6:30 up. That's what we're doing on GC. I'm going to take on GC $150 worth of risk. Usually I'm between 150 to 250, as you can see, for pretty much any instrument. Usually that's where I'm at. So 6 to 6:30 up. Okay, 6 to 6:30 up, and my risk $10 a tick. $10 a tick. So 15 ticks is what we're risking. Slippage is 1. We have to also switch this. Okay. Again, I just have to switch the long, but that's okay. I'm doing both long and short. Okay, you don't have to do the short because we're not looking for short trades. So 6 to 6:30 long. Let's make sure it's GC. It is not, so let's change it. GC, and this is the final one. All right, 3 trades, 2 wins, 1 loss. Let's see what happened. Okay, so it entered here. All right, that immediate loss. That one booked the profit. Look at that, and that one booked the profit. Again, look at this run that it could have had. Okay. We're trying to capitalize on unrealized gains. That's what we're trying to do. So the system predicted up. Boy, was it up. Okay. So AI Trend Predictor said this, GC is going up between 6 and 7. And that's 7, guys. Okay. Anyway, the point is that you made a decision. Whatever that process is, you got to stick with it. You can't say, you know what, I should have gone, I made a mistake. I should have put $500 for this on the stop. Okay. If you do that, the next time, if it doesn't have that kind of a run, okay, guess what's going to happen? You're going to say, man, I could have capitalized $300, but I tried to get greedy, and I went with $500. So this is sort of as much automation as we can give people. You still have to make those decisions. The choice is yours. You are in control, okay? You need to say, I'm going to do this, and I'm going to stick with whatever I decide I'm going to do. I'm not changing anything. Okay, that's very important to have that process. Win or lose, you thought about it, you tested it, and now you enact it. You execute what you tested. No matter what happens, over time, you see with the tools that we're giving you, I'm giving you right here, you're going to have an advantage. You have an advantage. You have the type of advantage. I'm using the best, one of the best machine learning libraries in Python to make this prediction. And I'm using a fantastic library that essentially is able to do proper statistical analysis to see how often the prediction side of it was correct. So you have fantastic tools at your fingertips, and it's going to be affordable. Okay, so you have all of the tools that you need to be as successful as one can possibly be in this business. Okay, I hope this very long video has been helpful to you. If you have any questions though, feel free to ask me. If I didn't cover something in this video, by all means ask me. That only helps me. Or feel free to comment in the comment section and let me know what your question is, and I'll be happy to answer it. If you want to reach out to me, it's Rafi@pinnaclequant.com. Again, this is 3 separate tools that I'm giving you that is going to be available for you for purchase at an affordable price. And what we can do, if you wanted to, if you're moving size, you want to do this. You don't want to do this because it's fun, okay? It's fun for me maybe to build it because I love coding, but it's not. It shouldn't be, to spend money for no purpose. If you're actually doing, you're moving size and you want to combine these 3 into one strategy that does all of it for you. Essentially, that strategy, you load it onto a chart. As long as the data is there on the chart, it will grab that data, feed it into the machine learning tool, into the Python script in essence, and generate the data, feed it into a file onto your computer, and then I can read from that file whatever I need to read, okay? And make the entries and the long and short entries. So essentially automating the entire thing, but it requires custom work. We have to talk about directories, we have to talk about file names, etc. Okay? We have to be on the same page. If this has been helpful, please share it with others so that they see what it is as well. Until next time, take care of yourselves. God bless.